Good morning, guys. My name is Pete, and this is Trading Kitchen. Welcome to this new free video content in which I will fully explain probably my best strategy for intraday trading that can be easily adapted for a swing trading perspective. Let me first invite you to join my Discord group. Follow me on YouTube and subscribe my channel to let me know using the comment section below what do you think about this video. Press the thumbs up button saying oh story guys I know. Follow me on Instagram as well, in which I will share some quick tips that can be useful to you to be a better trader. And obviously I have a trading view profile in which you can see my weekly overview every Monday for multi-day swing trading trades. Okay, let me focus very quick on this group. You can join, and it's completely free. Every day I share my ideas for an intraday and swing trading perspective. I share some educational content. We can do a group mentorship, and above all, I have a trading journal that I share with you guys with all my backtests and all my trading, all my trades every day, and in a very transparent way, and everything for free. Why for free? Because my only target is to create my community and share trading ideas with traders like me. And I don't care about your money. I don't need your money because I earn enough from trading activity. But for me, the sharing is really important. Okay, so join my community and please let me grow my community. Okay, what about trading journal? This is my trading journal that I share every day. As you can see, I have lots of stop losses. These are my three strategies. Okay, today we are going to see the BS strategy, so the breakout strategy. As you can see, June is not going very well for me if you compare it with the last month. So May, April, but in the Discord group you have everything for free, so you can take a look. So today, breakout strategy. This is the agent session strategy that I didn't explain yet. Maybe I will do it. The LP liquidity pattern is another very good strategy that you can see on my my past videos here in YouTube. Today we are here, so breakout strategy. To be honest, the BS strategy is the best one because all the checklist that I will give it to you more or less is the same of the other two strategy. What really changed between the BS strategy and the other strategy are the levels, basically are the levels from which I will open a trade. Okay, but the checklist is at the 90% the same. Okay, so explain to you the BS strategy. I will explain also the agent session strategy, and another time the LP strategy. Okay. Well, so we can jump on trading view. We are on the 1st of June. I will show you some trades that I made during this month. Basically, I quit trading this month because as I showed to you, it's not a good month for me. I'm a profit, but I started to eat lots of stop losses, so this gets me frustrated. So I prefer to quit trading just for a while, and we'll begin yet to trade in July. Anyway, so what's the main concept between this strategy, which is pretty much simple? So we have a strong bullish trend, or bearish trend, in this case bullish trend. We just wait a breaking of the structure, a liquidity grabbing, another breakout of the structure, retest, and we get short here. We get our trade here. Stop loss above the manipulation, which is usually often, not usually often, you see it from by a long wick, okay? And basically this kind of movement are inside the London opening and the US opening, so between 8 and 10 London time and 2 p.m. more or less, 3 p.m. always London time. Okay, so basically during the hour of the market opening. Okay, so this is the main concept. So after a strong trend, we have a liquidity level. Okay, it's very important that this level is being created inside a supply zone or a demand zone or a liquidity zone or an order block. So inside a very key zone. Okay, this is very important. A liquidity level alone without any other confirmation is not enough. Okay, so liquidity level. What's a liquidity level? I will show you an example later. Manipulation. This is very important. This is basically the last step before the trigger. Okay, and if you don't see any manipulation, if you don't see any liquidity grabbing, okay, this is I mean, you cannot open a trade. Okay, before the liquidity grabbing, the another very important thing is a clear break of the structure. Okay, this is very important. Liquidity grabbing, strong impulse, another break of the structure. Okay, and then retest to open a trade, where the retest basically inside this zone. So from the first breaking of the structure and the imbalance, okay, or inefficiency that is going to be created inside this impulse. Okay, there are so many concepts, I know, but it's not difficult. It's not easy. It's not easy, but it's not difficult yet to train to train your eyes and try to simulate some concept like breaking of structure, imbalances, and inefficiencies. But everything I will explain to you everything. Okay, so this is the main concept I created for you guys, and this is very, I mean, it's not something that you can easily find on free here in YouTube, but I create for you I give to you my personal checklist. Okay, so this is what you have to keep in mind. This is the strategy. Okay, so first you have 3 basically time frame. Okay, let me show you the time frame. So for intraday strategy, 4-hour time frame or 1-hour time frame to identify the bias and major key levels. Okay, 50 minutes time frame, identify the intraday key levels. So basically the work that you have to do on 50 minutes time frames is the same, okay, of the one that you have to do on a 4-hour time frame. And then I have 2 minutes time frame. You can use 5 minutes time frame. You can use 1 minute time frame. Okay, this strategy is working very good with 2 minutes strategy, 2 minutes time frame, but it's more or less the same. Okay, so 2 minutes strategy, 2 minutes time frame is for trigger. Okay, so this is basically the time frames. Okay, so my checklist: number 1, identify bias on 1-hour time frame, 4-hour time frame. To increase your risk reward, what I mean, you can use this strategy counter trend. Okay, I use this strategy also to go against the trend. Okay, but obviously if you line with the main trend, okay, for an intraday trading, and the main trend for intraday trading, it's clear and on a 1-hour time frame and 4-hour time frame. So if you line up with the main trend, your risk reward will be higher. Okay, I use the strategy like all my strategy basically with risk to reward ratio 1:3. Okay, so for every $100 that I risk, I want to earn $300. Okay, if a trade does not respect the 1:3 risk to reward ratio, I will not enter a trade. Okay, so first identify bias on H1, H for 1 hour and 4 hour time frame, and on this time frames you have to identify the strong key levels. What strong key levels are? One, liquidity levels. Probably these are the most important one. Okay, you can easily identify liquidity levels looking for high, huge wicks candles. When you have a candle with strong wicks. Sorry, okay, so like this. Okay, and here you have demand zone and the supply zone. Okay, in case of bearish, obviously, in case of bearish trend, this is meaning that here there is liquidity. Okay, this is liquidity. I will show you an example later. Okay, but basically the main concept is this. I know that is superficial, this kind of explanation, but the main concept is this one. Okay, so liquidity levels, high risk candle, supply and demand zones like this basically could be the same. Okay, because liquidity level, you can find liquidity inside supply and demand zones, obviously. Imbalances and inefficiencies. Okay, what imbalances and inefficiencies are, I will show you later. Okay, but I have made a lot of video on my YouTube channel explaining imbalances. Okay, so you can go and check it out. So when you do this, you can move on 15-minute time frame to identify the key levels for intraday trading. So basically the same work. Okay, liquidity levels, high risk candle. You can use the USA indicator to identify. Okay, to identify the key levels. I only left the ultra high volume ratio and the very high volume ratio. Okay, so the violet and the red one, because I don't want to see any other thing. And basically these are the institutional candles, institutional volumes. Okay, so when you see a strong volume, a strong histogram like this, okay, means that the candle basically are a high volume candle, is a high volume candle. Okay, so liquidity levels, supply and demand zones, use imbalance indicator, we'll show you later. Asian session, high, low. Okay, so you have to highlight the high and the low of the Asian of the previous Asian session. Why? Because institution works a lot, okay, with manipulation during the US and the London opening when price reach the high and the low of the Asian session. So there are two levels that are strongly manipulated, okay, from the big boys out there. Okay, so keep in mind, Asian session, high lows, very, very high profitable levels. Number 3, as price touches one of the key levels mentioned above, move on 2-minute time frame and wait for a clear break of the structure using imbalance indicator if you want. Number 4, enter the trade when price retests the level of the structure that had been broken. Sometimes price doesn't retest the level. Okay, so price sometimes do like this. It's not retesting, but it's going down. Okay, so you miss the opportunity to enter the trade here. Okay, so I will always wait for a retest. Okay, I am a conservative trader. I don't want to to enter the market because I have to, because I have to trade absolutely every day. Okay, there are one very good pattern, one very good candlestick pattern that helps you to not to miss the opportunity, which is the ETT pattern, the tail pattern. Okay, which is a very good pattern that I already explained in another YouTube video. Go and check it out, guys. It's very good. It's a high profitable candlestick pattern. But remember, if you use an tail pattern and you enter not on the premium zone in case of bearish trend, okay, so not here, so not from the 70 of Fibo and on the fourth quarter, basically. Okay, if you don't enter here but you enter close to the half range, you have to adapt the stop loss, because usually my stop loss is few ticks above the high. Okay, the manipulation, this is the manipulation. Okay, here we have liquidity level. Okay, here liquidity, manipulation, breaking of the structure, wait for the retest and re-enter. If price will not retest here, just wait for an intraday pattern. Okay, if you enter here, your stop loss cannot be there. Okay, but just here inside that, you can set your stop loss 2 ticks, 3 ticks above the last structure here. Okay, the risk reward ratio at least 1:3, but if you enter correctly the market, you can set your stop loss to the next liquidity zone. Okay, to the next high level. So this is very good because your risk reward can be so much higher, also 1.6, 1.7. Okay, be careful too. Market opening manipulation, do not, or better, you have to train your eyes. You have to backtest it. Okay, during the US opening and London opening, there are so many opportunities to trade. Okay, the huge profit that I made during this market opening, but there are so many manipulations during the 15 minutes opening. Okay, so you have to be very conservative, not enter for a buy trade, for the long trade inside the premium zone, and not enter for a bearish trade inside the discount zone, because price a lot of the time retest the last structure, retest the highs and the lows of the opening. Okay, so there are so many fake movements, okay, during those minutes. So at the beginning, my advice is not to trade during 15 minutes before and 15 minutes later after the US and the London opening. Okay, there are so many opportunities also after London opening and after US opening, so don't worry about that. Liquidity levels created just before the break of the structure, price will grab the liquidity. Okay, so if you have another level, okay, if during the break of the structure price create another liquidity, be very careful, because 90% of the times price will go to grab the liquidity, I will show you an example later. Point 3, all the key levels close to your entry. If you have 2 or more consecutive key levels, choose the conservative one. So be very careful. If you have a lot of key levels together, close one to each other, just choose the farthest one. Okay, this is not the rule. This is my suggestion, because I am a conservative trader, so I prefer to miss the trade, okay, but have the statistic by my side. Okay, and sometimes I miss a lot of trades. I know that's the reason why I made 1 or 2 trades per day. Okay, because I miss a lot of the trades, but I prefer to do this because I'm pretty much sure that I will increase my risk reward and my win profit. One thing that I didn't tell you guys, this strategy is risk to reward 1.3 minimum. Win profit rate is 55%. Okay. To be honest, in June, my win profit was drastically decreased. I know, but there are a lot of my mistake. Maybe I was not concentrate enough on trading. So this is I've been trading with the strategy for about 20 months, more or less, and I have backtested it for the last 2-3 years only on S&P, Nasdaq, and DAX. But I suppose it's going to work also on Forex. Okay, I backtested it also on gold, but it was not working very good. Okay, so my suggestion is to use it with indices and on major currencies. Okay. Anyway, win rate is 50-55%. So as you can see, I hope you do not believe in 90%, 100% strategy, win rate strategy, because it doesn't. They don't exist, guys. Okay, don't believe in all the guys that tell you that they are a strategy win 100% win rate strategy. Okay, you can do 100% win rate. Okay, but you can do it just 1 month, maybe 2 if you're lucky. Okay, this is a strategy that I backtested and by which I work from 2 years. Okay, so it is working. Okay, it is working. So this is very important. So risk reward 1, 2, 3, and 50-55% of win rate. It's a huge strategy, guys. It's a huge strategy. You can really profit. You can really be very good. Okay, all month. Okay, and it's good to pass any prop firm. So just backtest it and let me know what you think. Okay, so I know this is will be a long video, I know, but I want to be sure that I tell you everything because it's not an easy strategy. Okay, it's not an easy strategy. So, okay, let me remove everything and we'll do for you now some backtest. So first of all, we are of one hour time frame, and the thing that I want to do is identify the key levels. Okay, so this is liquidity level. Here we have the demand zone. Okay, you have not to be precise to do that, but just remember to do this, okay, because it's very important to identify, for example, this level. You see, we have an institutional volume here, strong volume, engulfing, long wick. So it's easy to understand, okay, or to imagine that here we have a lot of liquidity. What does it mean? That probably here we do have a manipulation inside here that institution want us to believe that is going to break this level, grab the liquidity, and then boom, okay. Another very important thing to know is double tops and double bottoms. Okay, so like this, double tops and double bottoms are a very huge liquidity level. Okay, why? This is a typical smart money concept. Okay, so what retailers, classic retailers trades do in, like here when they see a double top like this, okay, simply wait for breaking of the structure, retest, the neckline and open a trade here, stop loss just a few pips above the double top, and TP here. Okay, obviously institutions know that. Okay, so what do? They manipulate it, grab the liquidity, okay, and do like this. Okay, so this is a clear manipulation. That's the reason why double tops and double bottoms are very, very good confirmations, okay, because it means that this is not the end of the range. This is a clear liquidity level. So here there are so many liquidity that institutions want to grab to get all the volumes, take all the stop orders here, all the stop losses, to get all the volume they need to go down. Okay, this is a clear concept that now from since 1 year more or less, a lot of people understood. Okay, institution saw this, and what they do? They do another manipulation here. Okay, this is what is going to happen during the last year. Sorry. Okay, so they made another manipulation here with stop loss just one tick before the manipulation, the high of the manipulation here. Grab also this stop loss, and then finally keep on going short. Okay, this is for a bearish trade, but obviously the same thing for a bullish trade. Okay, so be very careful to this kind of manipulation. You can avoid this kind of fake movement looking for the time. Okay, during this kind of movements are typical during US opening and London opening. Okay, so if you know that, you can wait here, for example, for a retesting. You can wait here for a needed tape pattern, okay, and enter correctly the market. Okay, so double top and double bottom like this are very, very potential levels in which price will which institution will manipulate the price. Okay, the market. They manipulate the market, not the price, to be honest. Okay, so okay, we are 15 minutes. We are on 15 minutes time frame. So it's 1 hour, 1 hour and a half after the London opening. Okay, I always prefer to see the price going out the Asian box. The yellow one, this yellow box is the Asian session. Okay, I forgot to tell you about the indicators. So I use this kind of indicators, Asian session range, which you can easily adapt your time, okay, to better identify the Asian session. But this is the only thing that I want to do: identify in the fastest way the high and the low of the Asian session, because as I told you before, they all are very good levels from which a manipulation is going to be can be created. Okay, another very, very good indicator that I suggest you to use is this one. So the fractal break imbalance. Okay, this indicator helps me to identify the imbalances and the structure breakouts. What are the imbalances? This is an imbalance. So basically, it shows us a strong impulse with the clear break of the structure, in which a lot of orders remain. This is the smart money concept. A lot of orders remain here, and they are unmitigated orders. Okay, so unmitigated orders means that most of the times, not always, most of the times, price going here to mitigate them. Okay, so when you see a strong candle with a huge body, nothing here on the left, nothing here on the right, means there are a lot of orders here left on the software, on the machine of the institution, so needs to be mitigated. Like in this case, okay, so imbalance, go here, grab all this order here is not enough, grab another order here, okay, and finally break another structure. And basically imbalances and inefficiencies are not the same concept, but you can find them inside the same structure, the same candle. So the inefficiency is this one. So the last candle before a huge impulse. Okay, so inefficiency is a precise level of the imbalance. Okay, inefficiency, so imbalance follows the inefficiency. Okay, basically are the same concept, guys. Okay, so this is inefficiency. Okay, so this is a very good level to keep monitoring, and here price returns and get all the unmitigated orders inside here. Okay, here we have another one. Okay, so last candle, and this is a classical smart money concept of saving, I suppose, but it is used from by the best trading, the best traders and analysts in the world. Okay, so here price touched and broke the Asian session low. You can go on 2 minutes time frame, okay, and wait for something like this, okay, so, or a clear break of the structure. That's the reason why I use the fractal indicator and imbalance indicator to better identify imbalances and enter here. Okay, so at the level of the last structure or even at the imbalances. Remember, if you have another inefficiency here, so below the level, I am a conservative trader, so I have to wait. Okay, I prefer going here. I prefer wait for the price going here and enter the trade here. Okay, anyway, here I will not enter for the simple reason because there is no liquidity level. Okay, there is no liquidity that has been created, and I have a strong liquidity level here and here, so I just wait for the price to reach this level. Okay, okay, so price, this is pretty much clear. Price reach the Asian session high, make this huge engulfing candle with this strong wick here during the US opening. So this is a clear signal for me, because probably this is a liquidity level that we do wait, that push on this supply. Okay, so when price touch the liquidity level, I just switch on 2 minutes time frame. Okay, so what we can see here, we have a double top here. Okay, sorry, double top here, this one and 2. Okay, and then liquidity grabbing with an engulfing during the US opening. This is clear. Okay, imbalance had been created, structure had been broken, so for me is a very clear entry, this one. Okay, very clear entry, this one. The target will be this one, so the next liquidity level. Stop loss 3 when you see 3 on risk reward, which is also above, more or less above this high. Okay, and as you can see, this is very good. Okay, so basically this is a strategy, and it's very, very good because if you're really able to identify liquidity levels and you see a strong movement to your direction with the breaking of the structure and the liquidity grabbing on the 2-minute time frame, everything is done. Okay, you have so many confluences by your side, so you can open a trade. So now we can delete, obviously, this liquidity level. We can delete the supply, also the liquidity as well. We can stop here because we have now price that touch this liquidity level, strong liquidity level that we highlight on 1 hour in 1 hour time frame. In the 50-minute time frame, get this quick reaction or this engulfing. This is not enough for me because the structure is not being broken. Okay, so what we can expect clear breaking of the structure on the 2-minute time frame, which can be this one. Okay, to be honest, so the strategy tells us to enter here. Okay, but with this strong bearish momentum, I will not enter the trade. Okay, this is too strong. Probably now is going to go long, but to be honest, I will not enter here. And even above all, I have no confirmation here, and I have a demand zone, okay, close. So I just prefer, yeah, for the price to reach the demand zone, and I will not enter on the late afternoon because after 3-4 hours after the US opening, there are no volumes enough. Okay, and there are so many fake signal. Even if in this here it was good. So price reached the demand zone. Okay, break here the structure is not good for me because it's not a clear breaking of the structure. So just grab the liquidity here, engulfing, break another structure here now can be good. Okay. So you have to wait for a retest that is not be completed here. So this for me is not good. I mean, there is no trigger, there is no detailed pattern, nothing. So I will not enter here. So we can move on the next day, and let's see what happened. So now we have this level because we have good liquidity level here, and obviously here price just touched demand zone, so probably is going to go long. But as I told you, you can also trade counter trend with this strategy. Here we have is not a double bottom, this one. Okay, it's not a double bottom, but this could be good for a wolf wave pattern trade. If you don't know what I mean, you can go and check my YouTube video, the wolf wave pattern. But basically the concept is the same. It's a liquidity level from which we can wait for a manipulation to be created and to open a trade. So let's wait for a Asian session to be completed like this. Okay, so here we have inefficiency here. Okay, so this could be good to enter for a short trade. Let's go on 2 minutes time frame, but there is no breaking of the structure. This is not enough, guys, because when price go out the Asian session, you must wait for the price to re-enter and break the structure, break the candles that made the huge impulse to go out of the Asian session box. Okay, so here, for example, this is the candle that broke the Asian session box. It means that I need another candle to go short that close below this structure. Okay, and basically this is not happening. And to be honest, this is a clear strong level because Asian session high works like a resistance, support in this case. So after a strong retest engulfing, you can go long here. I will not open any long here. Why? Because I have a very strong liquidity level here, and I will not reach my 1-3 risk reward ratio here. Okay, so I will not consider this trade. I just wait for the price to reach this level. Look here, double top. Okay, double top and liquidity level here. Okay, so as price broke the level, we can go on to minute frame. This is a very risky trade because we do have a liquidity here, a liquidity level just above here. Probably price is going to reach it, but anyway, let's see a clear breakout of the zone to open a short trade. We don't have yet it. Okay, we do it. We have one clear break of the structure. To be honest, I will not open here any trade because I just wait for the price to reach this level. Okay, because as you can see, from this level, a huge impulse had been created. Okay, with a clear break of the structure. So I'm pretty much sure that here, and look on the left, we have an imbalance. I'm pretty much sure that here we have liquidity. Okay, this is a good one, but as you can see, there is not volume enough to believe in this liquidity. But anyway, let's turn on to minute time frame again, and we see break of the structure, imbalance. So as price re-enter this level, we can enter a short with stop loss just a few pips above the high, and the 1-3 with the risk reward ratio. Let's see what's happened. Okay, price trigger my trade, go immediately down. To be honest, here I will move my stop loss to break even because we are close to US opening and it's very dangerous. And yeah, we hit our TP, but as I told you, probably this is a trade. I will not do it. Okay. Okay, price get. I was too quick. Okay. Anyway, let's move here. So price get this liquidity. Okay. So this dynamic liquidity. This is not a trend line. This is a dynamic liquidity. Okay. So I move on 2 minutes time frame. What's happened? A lot of institutional volumes, obviously, because we have during just a few minutes later the US opening. Clear breaking of the structure. Okay, break of the structure. So what we can do, just wait for a retest above here, stop loss here, and take profit here. Okay. Okay. So we didn't hit the stop loss, but because we are lucky. But let me suppose that we hit the stop loss. Okay. Let's move back on 50 minute time frame, and remember to highlight all the horizontal liquidity levels, not only the dynamic ones. Okay. So price grab the liquidity here. Okay. So we can go on 2 minutes time frame because the trade is still valid. When lots of the times, to be honest, guys, I hit stop loss like this. Okay, just because it's impossible to forecast the manipulation. Okay, so when this happens, don't worry, just re-enter the trade. Okay, where you can enter when you see a trigger like this, an engulfing, or you can wait for another breaking of the structure. Okay, but we have one break of the structure here. We have liquidity grabbing here. So there are so many confluences. Okay, look here also, we have so many triggers because we have a negative pattern here. Look, the tail of this candles completely eats the previous candle's body, so you can enter here. Okay, this is another EDT pattern. okay, with a strong engulfing, strong impulse, strong bullish volumes. Okay, another EDT pattern here. Look how many EDT patterns. The EDT patterns never works good alone. Okay, remember guys, this is very important. But if you're using Confluence with a volumetric analysis on in Confluence with manipulation like here, it's so strong, it's so powerful. Okay, so this is another entry. What about target? The next TP, which is this one, is not enough, so let's move here. Okay, so another entry will be here. We can set our stop loss, our TP here on the next liquidity level, and so on. Okay, and we hit easily our TP. Okay, so and you have so many triggers, so many entries. Obviously, you don't have to wait a lot to enter. So, because as I told you before, in this case, if you enter here, so on the premium zone, you have not enough space, enough time, enough pips to hit the TP, and probably you're going to hit the stop loss because price need to breathe. Okay, price need to breathe, so price retest, retrace, grab some volumes here because here there is a supply and demand zone, and then go up again. Same thing here, you cannot enter here because even if the price will reach this level, now is going to breathe to take some volume again, maybe here, okay, and then move up. Okay, last trade, let me move on the next day. I will show, I will show you the last trade. Now, unfortunately, we see how things is going to develop, but anyway, it's not the problem. So price before the Asian session, this is very important, guys, touches the liquidity level over here, which was a strong liquidity level, but because we found it on 1 hour time frame, so it is very, very strong. When this happens, remember that probably for the next session, price grab the liquidity here and go against the liquidity. Okay, so in this case, you don't have to wait for this level to be touched again because price already touched this level. So now just wait for a clear trigger. Okay, how? I don't know. Let's see now what we can do. This is the trigger, guys. Okay, this is a clear EDT pattern. Beautiful, strong volume with this week that completely eats the previous candle's body. So after liquidity grabbing here and another grab liquidity here. So what you want more, guys? This is enough. This is enough. Okay, you can set your stop loss just below above the session high, or maybe also above the manipulation. Doesn't matter. If you see this kind of pattern after manipulation during the market opening, means that probably you cannot be sure 100% obviously, but probably price will do this. Okay, now we know that because we've already seen it, but this is probably this is the easiest trade that you can do. Okay, because everything is clear. Okay, the last trade that I want to show you guys is the trade that I posted on my YouTube, on my Discord group. So the first one is this one on DAX. Okay, let me hide this order founder, which is an indicator that I am testing now. So this was my first trade of today, which I hit my stop loss because I'm stupid. Because as you can see here, Price broke the Asian session high, retested, create this long wick, okay, and then going to retest again. Okay, so I enter here on the breakout because this is a clear 80-day strategy. I set the stop loss just too close to this candle's low, but I mean, you have to let the market breathe, okay, and because this is a clear liquidity level, so the stop loss will be here more or less. Okay, it doesn't matter because as I saw this break of the other structure and re-enter, I re-entered here with the stop loss of the low of the same candle and TP here. Now I am short. This is not a TP because price turned and reverse, and I move my stop loss on break even, and this is break even target, a break even trade. But I want to show you the second trade that is currently running on 50-minute time frame. I sold this in efficiency. Okay, so as you can see, we have an empty space here between this candle. Okay, so I just wait for my trigger on 2-minute time frame. Okay, breaking of the structure, price retested. To be honest, I was not able to get this trade. I miss it because on 2-minute time frame things are very quick. But I sold this in the day pattern. This one, okay, and was enough for me. Okay, when you see it, you can also use a stop loss just smaller, so close to the entry, close to the highs of the candlestick pattern. To be honest, I prefer to set a larger stop loss because I suppose that probably price is going to hit the Asian session low. Remember, Asian session high and Asian session low are also very good for take profit targets. Okay. So guys, it was a very long video, but I hope everything is clear for you. Just one last thing: subscribe the channel, press the thumbs up button, ring the bell. Same old stuff, guys. I know, but please let me grow my community. This is very important for me, and let me know what you think about this video. Use it in the comment section below and what you want to see more. Okay. Thank you very much, guys. Join my Discord group and see you in the next video.